Okay.
The broadcast is now starting. All attendees are in listen-only mode.
Hello everybody. This is the Forex Fundamental Analysis for June 27th, brought to you by OctaFX. OctaFX, an award-winning broker that has one of the lowest spreads in the industry. So, as we begin, first of all, a bit of some housekeeping. Some disclaimers. The risk disclaimer. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. And a hypothetical trading disclaimer. The information in this webinar is provided as general market commentary and does not constitute any investment advice. So, quick words about myself. My name is Yohay Elam. I'm a Forex Analyst. Used to be a retail trader and a computer programmer. I founded Forex Crunch in 2008, where I focus on fundamental analysis, touching on technicals of course. The same we'll do right here. So, on the agenda today, we have all the stories moving markets, next events to look out for, lots of central bank talk, key levels of support and resistance for all the pairs we'll cover. And the pairs we'll cover, dollar yen. We'll use dollar yen to discuss the US dollar. That's the best currency pair for this. We'll discuss everything going on in the Eurozone with Euro dollar. Lots of news around the UK. And we'll talk about the pound. Then we'll move to two commodity currencies, the Australian dollar and the Canadian dollar. Okay, let's begin. What are the top stories moving markets? So we're seeing some weakness of the US dollar across the board. One of the main reasons is that US data continues disappointing. Okay, some Fed officials, we heard that last week, cast some doubt about another rate hike coming this year because inflation is just too weak, the economy is just too weak. This is of course also bad for the dollar. But today we have a major speech by Fed Chair Janet Yellen. She's number one at the Fed, not number two, not number three, not a dove, not a hawk. She's the one that makes most of the decisions by herself. Okay, we had on the political front some victories for the president regarding the travel ban, which was reinstated at least partially until October, and the healthcare bill is still in negotiations. Watch out for that space. If the healthcare bill falls in the Senate, it's bad news for Trump, bad news for the dollar. If it passes through, it's good news. On the other hand, on the geopolitical front, we had the United States warning that Syria might be about to conduct another chemical attack. That's of course very worrying on a humanitarian level, and it pushes the dollar a bit lower. Mostly helps the yen, because the yen is a safe haven currency when things go wrong. Oil prices stabilized around $43 after falling just to 42. There is an inverse correlation between oil and the US dollar. Currently it's stable, no impact. But remember that oil prices are vulnerable because there's just too much supply, not enough demand. Okay, and dollar yen is looking for direction. We'll see that soon. It's in the middle of the wide range. So, Fed speak. We have lots of that. We had Dudley, number 3 at the Fed, repeating his optimism about the economy, about inflation, about everything. We heard from him twice already. So reiterating this position is positive for the dollar. But Williams of the San Francisco Fed looking for another hike, but showing a bit of a doubt. Okay, not as optimistic as he used to be. Evans, well, he's a known dove. He's worried about the impact of Amazon pushing prices lower. That's bad for the US dollar. And Harker, which used to be a hawk, which used to be more bullish for the US dollar, he is worried now about inflation. And the next hike currently seen only in December. All this is a preview for what we'll have today from Yellen, which has the strongest impact. So we're in terms of news, why could Yellen be a bit more negative for the US dollar? The most recent news came from the durable goods orders released yesterday. They fell more than expected, 1.1%. Also the core numbers fell. This means that investment remains quite low in the United States. and that is a warning sign for the Fed, because investment is a forward-looking indicator. It reflects economic activity also in the future. Okay, new home sales, they were actually positive on Friday with 610,000. Next big events, I mentioned it already a few times, but Yellen is the big event. Before that, we have the CB consumer confidence. It has reached the highest level since the crisis, but it is falling a bit, okay? So watch out for that at 2 GMT. Harker, which I said used to be a hawk, now not so much. You will be talking once again at 3:15, but sort of the main dish for all the currencies basically is the speech by Janet Yellen at 5 p.m. in London today. Let's see if she continues dismissing inflation as due to one-off effects, wireless charges, prescription drugs, things like that. I see these things as excuses. Or she says, okay, we have new data, maybe Houston, we have a problem. Okay, so that's the main event. It will be probably very volatile for the dollar. We're seeing now a bit of lower volatility, less movements in the US dollar because of the tension towards this event. Okay, even more speakers, but after Yellen, these become less important. We have Kashkari, which is a known dove. He voted against the rate hike. He'll speak later on. More things to look out for. Tomorrow, the Bank of Japan's Kuroda will be speaking in a panel with other central bankers at 1:30 GMT. We have pending home sales in the US at 2 GMT. I believe that tomorrow we'll continue seeing the impact of Yellen's speech. Okay, and we have oil inventories again. There's an inverse correlation between the dollar and oil. That means when oil prices rise, the dollar falls, and the other way around. The correlation is not very strong, but it exists. Okay. And Thursday, looking forward at 12:30 GMT, we have the final read of US GDP for Q1. Remember, it was quite poor on the first read. Okay, dollar yen in general. Talking about currency pair that is most sensitive to US indicators or central bankers. Okay, moves, of course, with the chances of a rate hike. If interest rates are set to rise, then the dollar goes up, if not the other way around. It falls with Trump, okay? It means we've seen that less than in the past, but when Trump is doing well, the dollar is doing a bit better because of hopes for tax cuts and infrastructure spending. An inverse correlation with oil, we mentioned that. And now let's look at the chart. So we're going to be using the OctaFX MT4 platform. Let me get that up for you here. So move to dollar yen. Dollar yen, as you can see, very much in range. It made a break above this uptrend channel, but never went too far. Got stuck here at resistance. Look how this resistance line worked very well. So we can see here a double top on dollar yen at 112.10. Okay, if we look further up, we can see 113.15 and 114.30, which was the cycle high. Okay, if we look down, we're talking about levels. We're talking about 110.70. Okay, and last barrier before the 110 level, and then only 108.80, which was a very recent low, and then 108.10, which was the cycle low. Okay, so these are the levels we're talking about in dollar yen. Currently, we're in the middle of this wide range between 108.10 and 114.30. Okay, let's continue with the world's most popular currency pair, euro-dollar. What's going on in the Eurozone? Mario Draghi, the president of the ECB, is in Portugal with other central bankers. He talked yesterday, he will talk again today and throughout the week. In his first speech, he said that there is still a need for lower rates. This kept the euro limited. Okay, it's euro negative, but it's not news. We already know that Draghi is a dove. He prefers keeping loose monetary policy as long as possible to help inflation rise, to help growth rise. Other members of the ECB are more optimistic, and they want QE tapering. They want the ECB to stop buying bonds. On Friday, we had Eurozone manufacturing purchasing managers indices. They were looking quite good, especially for manufacturing in Germany and in France. Some political stuff. Macron, French president, which swept into the presidency and won the parliamentary elections. He lost some of his ministers. So It's currently a very small bump, but watch out. Currently, expectations for Macron are very, very, very high. Okay, Italy. It provided support for its troubled banks. We had a similar story in Spain. So far, it went smoothly without impacting the markets. In the past, many worried about Italian banks that they could bring the whole system down. So far, so good. And the European Union looks united on Brexit. That's a euro positive, at least for now. Things could change. I'll talk about Brexit, of course, on the pound. Big events. Well, Draghi speaks again at 8 GMT, just after the show. We have also money supply tomorrow and private loans to see how economic activity is rising. These figures have been quite stable and relatively positive. On Thursday, we have the beginning of Eurozone Eurozone inflation figures, starting from Spain and then coming from Germany. And these all feed into Friday's all-European inflation figures. Remember, Draghi is very worried about inflation. Higher inflation, higher euro. Weaker inflation, weaker euro. All in all, euro-dollar, what's going on there? The ECB recently went dovish, so it's the monetary advantage that the euro had over the Fed is gone. The Fed went hawkish. On the other hand, things like growth still looks better in the Eurozone, and politics also look better. But the trend that we had, the uptrend, is now more of a sideways trading. And we can see that, of course, on the charts. Again, MT4 platform. Many of you are using this, one of the most popular platforms. You can see the uptrend since the beginning of the year. And in the past few weeks, we're stuck in this range between 111 and 113. To put it if we look even higher, if we do break at some point above 113, 113.60 is the next line. Under 113 we have 112.30, bang in the middle of the range. We were stopped here. Okay, below that, well, 111.20 is sort of a more precise point, but if we look at it, round numbers are 111 and 113. Below that, 110.25, and then 108.40, and yeah, that was the gap line, the post-French elections low. Okay, so that's euro dollar, very much in range, looking for a new direction. Currently 111.87. Okay, let's continue to the pound. UK developments, lots of noise, not so many movements. So finally, Theresa May, the Prime Minister, reached a deal with the Northern Irish DUP. So we have a coalition. There's going to be a vote later this week, a vote of confidence, and the government is set through. But many analysts in the UK are asking, is Theresa May, are her days counted? Because she doesn't have enough support within her party and within the public. The UK might go to new elections. They might replace their leader. Okay? The Bank of England, we talked about it a lot last week. They're very split between the hawks, those that want to raise rates, and because of high inflation, and this is pushing the pound higher, and the doves, like the governor, Mark Carney, which wants to keep interest rates low because of worries about the economy. So pound dollar is all over the place, but the range has become a bit more limited. Brexit talks didn't start that well. They did because Theresa May offered some protection for EU citizens living in the UK. The EU said it's not enough. This noise, so far, I don't see much of an impact on the pound. The pound cares more about access to the single market, about trade. Okay, and if we have a delay, of course, in Brexit, it could be negative. UK data. We had a consumer confidence measure. It showed that consumer confidence is the lowest in a year. This implies that retail sales will be poor. On the other hand, mortgage approvals, the housing sector in the UK is very steady. No signs of a downfall so far. Next big events we have today. The Bank of England publishes its financial stability report. Not exactly inflation, what the market cares about, but still of interest. And Mark Carney, the governor, will speak to present this report, so you might be asked questions about the interest rate. That comes at 10 GMT. On Wednesday, tomorrow, we have Carney speaking again. This is the same panel with Draghi, Kuroda, and others. And on Thursday we have net lending to individuals, also the amount of activity in the UK. On Friday we have the most important event of the week, the final GDP read for the UK. Remember, in Q1 it was very weak. We now have, it'll probably be confirmed at only 0.2%. Pound dollar in general, we have lots of factors moving the pound. The good, there are hopes for a softer Brexit, okay, because of a weaker government. Also, we have some hawkishness in the Bank of England, some members voting for a rate hike. The bad is, well, political uncertainty in the UK and with Brexit, and economic weakness. All the indicators are pointing to an ongoing slowdown after 2016 was quite good despite Brexit. Oh, and the ugly, of course, good, bad, and ugly, the Brexit talks. Let's show you the charts. So here we are in pound dollar, so we can see the fall after the elections, but we're currently sort of in the middle of this range, hugging the 127, 127.50 level. So the levels from top to bottom to watch here. At the top, if we do break higher, 129.25, then 128.20. It's getting very busy there. The ranges are becoming a bit more narrow. 127.75, 127, then 126.30. Okay, and 125.90 recent low. If we fall below 125.90, we find ourselves at 125 around number, and far below we have 123.50. Okay, so lots of noise in the pound, not enough action, but perhaps central bank talk, like everywhere, will provide more action. Australian dollar. If we compare the Australian dollar to the New Zealand dollar, well, it looks a bit weaker, but Aussie dollar against the US dollar looks very stable. There were some worries about the price of iron ore, but they didn't have a big impact. And we had the report that Chinese growth, by Bloomberg, report that Chinese growth has already peaked in 2017. If this report is correct, if the indicators are truthful about the Chinese economy, then we have some worries for the Australian dollar. But we haven't seen that so far. We have new home sales in Australia. Thursday at 1 GMT, we have official PMIs, forward-looking indicators from China on Friday, also around the same time. Okay, if we move to the charts of the Australian dollar, wait, I think I have more things to show. Wait, sorry for that. All in all, the gradual rise in the Aussie dollar reached its limit. We had positive data from Australia, like the jobs report, and from China, a pickup in industrial output. And the question is, if the US dollar weakens once again, does it have enough energy to rise? I think so, but again, ranges are relatively limited, more subdued than in the past. And now let's look at the chart. So here we are. We had this gradual rise from the lows, but then some range trading. I think the trend, as far as I see it, is still to the upside. Levels to watch here. On the top, we're looking at 76.80, okay? Then 76.35, busy stuff there. Again, ranges are not that big. We have then 75.60, 75.40, yes, it's very busy, and 75.15. Much lower, we have 74.10, which used to work as support, and then 73.25, much lower. All in all, we are moving to the upside, but the moves are gradual. Okay, and we'll finish with the Canadian dollar. We had some good news from Canada, but not everything was good. Canadian retail sales beat expectations with 0.8%, but inflation missed, and the Bank of Canada cares, like all central banks, about inflation. 0.1% month over month. Core inflation is only at 1.3. Not so good news. There's still hopes for a rate hike in October. Certainly not in July, maybe in October, but inflation will need to pick up in order to see that. So the hawkishness of the Bank of Canada, which pushed the Canadian dollar much higher, that means dollar CAD fell a lot, it's a bit in doubt at the moment because of this weak inflation. Canadian dollar remains relatively strong. Oil prices have stabilized. Next big events, at the same panel on Wednesday at 1:30. Big event for many currencies. Also, the Bank of Canada's Governor Stephen Pelosi will be speaking. On Friday, 12:30 GMT, Canadian GDP, the biggest event of the week. And we also have the Business Outlook survey, also by the Bank of Canada. Dollar CAD in general remains on a downtrend despite this inflation figure. That means Canadian dollar is still strong. Domestic strength continues beating oil prices for now. And of course, when oil prices don't go lower, it's good news. 130 is a big barrier. We're maintaining a safe distance from there. Okay, so now let's look at the charts. Dollar CAD. Here we are. Look at this downtrend. Okay, after peaking at 137.90. Further support 136.40. Used to be support, now it's resistance, of course. 135.40, the next level to watch. And then 133.80, which was a very, very strong line. Once it was broken, we never looked back. 133, another line, and the cycle low so far has been 131.60. So we're now in a sort of a consolidation phase right here, not going anywhere fast. The trend is still to the downside. Okay, so that's it for today. Thank you very much. Comments and feedback are more than welcome. And I will also mention today that we have educational webinars coming up about trading the news, about specific currencies. So stay tuned for all the information about this. Okay, so that's it for today. I wish everybody a safe and successful day in markets. And we'll see you in the educational webinars and on Thursday at the regular analysis show. Okay, so that's it for today. Thank you and bye-bye.